term expires in May. However, what it does at that point forward is perhaps troubling. Now, this is a market that's waiting until the event actually happens. It's unwilling to take a stand on negative events, and it's very optimistic on all events. To me, that's a cautionary sign. That's not a positive sign.
I mean, there's a belief, obviously, in the market. You hear it from executives privately. You see it from the stock performance that the so-called good pushing stocks higher just outweighs any of this type of stuff, whether it's telling defense companies you can't buy back shares, or telling private industry you can't own houses, or this thing with the Fed chair, or a number of other things that have happened. The good that's out there, the deregulation, the animal spirits stuff, the effects of the big beautiful bill filtering through, what's going to happen with corporate earnings, is just far more powerful than any of this other stuff, how troubling to some it may be.
For today, that's correct, but it goes back. They're basically, the bears are coming to a gunfight with a knife, right? And they're looking at each individual thing, saying, we can get by that. This thing with Powell, that's never going to happen. The Fed's always going to be independent. So right now, it's a glass half full market. I'm not saying that's going to change anytime soon, but it's a glass half full, and I don't think it's that. I think it's maybe even half full, half empty.
Well, I mean, Bryn, you look at the market activity since the start of the year. It's clearly a vote that it is a glass half full, or the market wouldn't look like it does. And the broadness that we've seen wouldn't look like it does either if the market didn't fully believe that.
Yeah, absolutely. I mean,
productivity like 2%, 4.9% in the most recent quarter. Unit labor cost down 1.9. That is very, very healthy. And the productivity number is actually pretty good for inflation expectations. So add it all up, double-digit earnings. Going away from technology, though, that's where the expensive stocks are at. You clearly see the rotation happening, and I'm there, you know that, and I'm adding to them. We're going to talk about some of the things that I have been adding to, because I have conviction in the underlying strength of the economy. So volatility increases, use it to your advantage and buy on dips.
Josh, do you believe what Rick Rieder had to say again yesterday, that this is the greatest investing environment?
Greatest might be further than I would go, but Rick is very bright, and I wouldn't disagree with him materially on just the overall positive backdrop. You have deregulation with an occasional insane tweet. That's really powerful. It's hard to quantify, but people are taking risks, and people are going into new businesses, and there's tons of M&A that you actually can qualify. It's a great last 12 months for M&A. You've got IPOs back. We'll get SpaceX maybe by the end of this year. I don't know. Is that $1 trillion IPO? Maybe you'll even get OpenAI. Is that $500 billion, $750 billion? I have no idea. Like, you can't look at a backdrop like this and say it's not a good environment. The real question is, are we already pricing in how good it is? And that's like the main debate. But look, I listened to the JP Morgan call this morning, and I know we're going to get there in a second. This is the CFO. Consumers and small businesses remain resilient, continue to monitor leading indicators for any signs of stress, despite weak.
Simply seeing some growing pains as we see this broadening.
I think we're seeing the consequence of elevated volatility, and it's been that way since the beginning of the year. You use the word momentum. Momentum is trying to find what will be the next trend establishing itself. Interestingly enough, it looks like Bitcoin and cryptocurrencies is where that next trend ultimately is going to be. Momentum remains entrenched in precious metals, gold, silver. That's not a recommendation to go buy them because I sold out of the GLD and I think they're extended. Small caps, the Russell, you still have momentum in place there as well, and some of the semis, and certainly energy and materials. But it's the type of volatility that's suggestive of capital not really leaving markets, but more reallocating to different places. And it feels a little bit uncomfortable because it's moving out of the familiar winners in 2025, the Mag 7, some of the financial names, and it's going to places like materials and energy where we were underallocated last year. So I think more than anything else, it's elevated volatility, and I think we all expected that.
Yeah, looking at the VIX right now, the VIX at almost 18, so a bit elevated from recent days. Not historically elevated, but certainly from recent days. Carrie, coming over to you as we kind of see these fits and starts in the market. We mentioned the markets have been pretty much flat over the last 2 months. You look at the Mag 7, they have been flat, down about fractionally 0.25% over that time. How do you view the...
Okay.
No, he's happy where we are right now.
Okay.
Although maybe not so happy because he wanted us to not be where we are right now.
No inflation.
Right.
Stay right there because you also interviewed Austin Goolsbee this morning of the Chicago Fed. He had a warning as well, and this one was more about the unintended consequences of the DOJ investigation into Powell. But take a listen what made our ears perk up.
Anything that's infringing or attacking the independence of the central bank is a mess. You're going to get inflation come roaring back if you try to take away the independence of the central bank.
It's twice we've heard the inflation word. My next guest also says upending Fed independence could backfire and that Powell should be commended, not condemned. Let's bring in Michael Darda. He's the chief economist and macro strategist at Roth Capital Partners. Michael, every time, look, I think intellectually these arguments all make a lot of sense, but often when we raise them, those who say we're on a larger disinflationary trend almost laugh and say there's no way we're really going to have an inflation problem, perk back up. What would you say to them?
Thanks for having me on, Kelly. Well, I would say, look, I mean, this is not leading in a positive direction. And you put a lot of political pressure on the central bank. If eventually the central bank buckles and starts to just behave in a political manner and not an economic one, that does lead to very unfavorable consequences. I mean, look, Venezuela's been in the news. Iran is in the news. These are countries that do not have central bank independence. What they have is a lot of inflation, currencies that have collapsed, and middle-class living standards that have imploded. So that is really not a path down which we want to walk.
No, but you're raising that analogy. I mean, look, here's what I'm trying to say. In the data, Mike, what do you see? And the GDP data has been very strong. But
You sold Elanco Animal Health.
Yeah, it was up 86% last year, so I took my profits and I put it into Zoetis because I do like animal health for the long term. It's a $50 billion total addressable market. If you include services and retail, by 2035, this is a $200 billion total addressable marketplace. There are only 3 players, IDEX, Zoetis, and Elanco. Zoetis has 20% market share, and they have absolutely not been impressive in terms of the execution. And it now trades at a discount to Elanco, which has never been the case. I think you have to go back 5 years that the stock has traded at a discount. It's at 19 times versus Elanco is at 25 times. So I'm just taking profits in Elanco, putting it into Zoetis. I think this CEO is kind of on a short leash, to be honest. A couple of quarters that have been very disappointing in terms of guidance. They have the products. They've got 5 blockbuster products coming out over the next 5 years. So now they have to execute. It is a show me story. And so I think, though, that the overall theme is a very attractive one. And I just think you're going to see some mean reversion throughout this year.
All right, while we're talking about Zoetis, maintain is overweight over at Morgan Stanley, price target at 160. I want to move on. Marriott, big price target raise when it comes to Marriott from Wells Fargo. Jenny, you're in this one.
Yeah, so it's a little bit late, I'd say, given the fact that the stock's up 24% since the end of October. But look, anyone who wants to give me a price target update, upside, I'll take it. So what you've got going on here is that you've got strong overseas growth. You've got RevPAR that was up